Every day wake up before the dawn, trading the stocks instead of cooking on the raven flies, searching for success. No apron, just a new kind of stress. Chasing dreams in the city lights gleam. Numbers and charts is the new regime.
Hello. Today I will talk to you a little bit about an indicator called volume weighted average price, or VWAP. This is an institutional concept. It's used a lot by the pro trading desks, and it differs from the normal moving averages, because the normal moving averages are just calculating the price development over a certain period, but the volume weighted average price continuously calculate from an anchor point how the price develops, but with an influence of the actual volume, meaning that when we actually show the VWAP line, I put it here, we have the blue, which is the VWAP line. This is an auto-anchored, it is a native VWAP from TradingView, and I'll just go into the settings. I can switch off the deviation bands. So the blue line we are left with here is the average price weighted by volume. And you can sort of say that is the accepted fair value at any given point when volume is considered. So the institution says very clearly that you are not allowed to buy when you're above the VWAP, because then you are paying above accepted price. And you're not allowed to sell when you're below, because, well, then you're basically selling in discount. Or you're not allowed to buy in premium, you're not allowed to buy in discount. So you have the bands here with a multiplier. They're called the standard deviation bands. And we just look at the price. The first one that I set it up for is 1.5 and 2. There seems to be a little bit of a deviation on the concept that you're not allowed to buy when you're above the VWAP unless you're above the 2 standard deviations or the 1.5 standard deviations, because when we are outside the standard deviation bands, we are in an expansion zone. So as long as price is being respected on the outside, we are clearly in an expansion. The same goes with selling, that when we are below, we are in a downward expansion. We are changing the actual perceived price. So at the institutional trading desks, this tool is very much used to say this is accepted price and these are the standard deviations. As long as we are in here, well, you should be looking for sells around the VWAP, selling towards the standard deviations. They're standard because they occur all the time. And when you actually get outside the standard deviation band, then you can continue in that direction with caution. So that's the general institutional concept of the VWAP. I have known of this indicator and this concept for a long time, but for me personally, it has not been super interesting. And the general reason why I haven't seen it as very interesting is that when we take the standard here, then we get a zone like this, which is the overnight session, the Asian session, which is very compact. And the VWAP stays very flat. The standard deviations band stays narrow. Then when markets actually open up at New York, they expand heavily. So as such, there is not a lot of forecasting potential in it. It's just showing right now what is actually happening. And I did not ever see any big value in that. But there are other ways to use this. So one of the things that I picked up on very recently is that we, in our toolbar over here, have the anchored VWAP. Now that makes sense in a completely different manner, because we can choose whatever candle we want to highlight it from or anchor it at. And if we take a significant low like this one and we put our VWAP on that one, I'll just switch off the multiply bands for easier recognition. In that case, well, now we have a significant low, and we have the volume weighted average from that low. So as we can see here, that has been a support band throughout this entire uptrend. We can do the same when we have a significant high. We have significant high here, and in this case we see that this works as a dynamic resistance. And if we're looking at market structure, after this high, we are not seeing any higher highs, we see lower highs, we see lower lows, but we get a dynamic point that is actually telling us that we start to accept fair value radiating from this high, and we break above it. So in this case, it becomes a dynamic trend line, and we can use it as a dynamic trend line. It works as a resistance, and as long as we stay under the VWAP anchored at the high, well, we are bearish. When we broke above it, well, we're bullish, and at that point we have our anchor point from the low. We could also take a different low here, place more or less the same, but it works as a support. We break under, but it works as a support again when we get above it. So the standard VWAP might not bring us so much value, but if we're looking at, now we are at the E-mini Dow's futures chart, but let's say that we were on a Bitcoin chart, using the VWAP at the significant highs and lows are gonna give us a very clear indication of where we have trend reversals. And since it is volume weighted, we could sort of get the same as this with an EMA and look for the EMA break, but since this is volume weighted, it gives us a more significant picture of the intent in the market, because when we break through, volume has changed direction. So this is the easy use of this, and that is something I have become very, very happy with just recently. I'm just gonna delete those we have. For this utility that I've just shown you here, Big Beluga, whoop, that was not the right one. Big Beluga has made an auto swing anchored VWAP. So we can set the length of the different VWAPs, how long they should extend. It's standard set for 50, and VWAP line width. We can use our own colors for bearish and for bullish to match our preferred visuals. And in this case, this indicator gives us a very, very, very nice, let's say, support and resistance band for the trends, which is very dynamic. And that works super well. Now, I am a big believer in that that volume. Well, let me phrase it correctly. I'll just find a volume indicator. I don't use the regular volume that much on my charts, but as we see here, we have massive spike in volume at certain times every day. 3:30 European time is the opening of New York market. That's a surge in volume. 15:30. This happens every day. And as we see here, the Asian session has almost no volume. The European session has some volume, but it, like the first 15 minutes of volume, is far exceeding the entire volume of the European market session. And then we have just around close, we have a volume spike again. So what I really is a firm believer in is that this I just got a message that, as I showed, the standard VWAP is gonna give us the volume weighted average continuously over the entire period. And I don't think that this low volume time zones are providing any value. And what I actually do believe is that if we have that included in our measured VWAP, it's just going to add noise. I'm also a very firm believer that we have different players in the market in the Asian session, in the London session, and in the New York session. Now we have an overlap, and that is called the COMEX time, from 1 o'clock until 3 o'clock. That's where some volume starts to pick up. That tends to be New York waking up, the early birds from USA, but it's also institutions starting to pick up on overnight orders and executing them. So to get the proper VWAP, I like to use the anchored one, and I like to use it on the first candle of significant volume. And if we look at, now this is a candle from yesterday, the opening candle, the 15-minute bar, and our VWAP here, well, something very interesting happens. We see here that the VWAP is broken above, but it is retested and respected. If we then, where did I lose the? If we add our standard deviation bands, well, then we can see that we stay essentially outside all day, and we get an expanding day. We can use this to measure where we're actually going. If we do the same on the previous day opening candle, we get the same picture until we actually see that price goes back to the fair value, and we break below, but we return to fair value. In this case, I believe that this is the 1.5 standard deviation. We have respected the level of 1 standard deviation. Let me play around with the settings. If we add all 3 bands, we can see here. And this gives us a different utility of this tool as well, because we can play around with something called stay in your lane. We have the accepted fair value price. We stay below the 1.5 standard deviation. We fail to break through it, even though we're expanding, we break below the 1. At the point where we break below the 1 standard deviation, we are bound for the VWAP. We see here, we break below and we go to the 1, we fail to break the 1, and we return to the standard. And this basically gives us a framework where we have an accepted fair value and we have the standard deviations. This can be a very, very powerful strategy to play in a ranging market. Most strategies that gives a huge win are breakout strategies, but the market is not always breaking out. Sometimes nothing happens, or basically nothing happens. In those cases, this gives us a framework where we have defined from the volume spike a fair price, and the fair price is being respected within standard deviations, and we can trade in and out of that. That was essentially it, and I hope you have enjoyed this. Thank you.
From the kitchen to Wall Street, hustle. A new game, new rules, ready to tussle. It's a raven's flight from pots to trade. A new life, choice we all made. On the move, don't look at like fright. From cooking meals to betting all day and night.